Welcome to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and we're going to talk about the new mindset, the mindset for real assets as opposed to the mindset for digital assets. And we're also going to talk about the Bank of Canada's recent hikes, what that could mean for the economy. Will it actually tamp down inflation? Do they care? We'll get into that. And then we'll also talk about the upcoming Fed hikes as well, because this is all, Jerry, by the way, hi, how you doing?
I'm doing well. Hey, how's it going? Great.
This is all under, the guise of trying to beat inflation that they caused. Let's be clear about that one. They printed a whole lot of currency. They shut down the economy. Governments have been deficit spending. No one wants to control their spending. And so inflation is running rampant, and it's somehow supposed to be sold to everyone as some sort of natural phenomena, when it's really you printed too much currency and now you want everyone else to pay for it. Now, that doesn't, not talking about malinvestment, as Christine Lagarde would say. There's definitely been malinvestment, and when it comes to low interest rates for a very long time, beware. Interest rates could start to climb. Money's going to get more expensive. So we'll get into a discussion on that. And then finally, we'll also we want to revisit supply. It's something we talked about last week in terms of the difficulty getting permits in sort of the environmental craze, the going green craze, the I want my cake and eat it too craze, where I want to use solar power, but I don't want to mine for the actual parts that go into making solar power. So we'll also get into that as well. But first, let's get back to, and again, we want to get into the Bank of Canada hikes as well, but let's start with the gold mindset. Because, Jerry, there's been one specific piece of information that I know that Vince Lancy, he does a weekly market update on Arcadia Economics. He mentioned this a few weeks back. And then you came across an article where it seems to be officially being put out there now that China wants to back its retail clients. In other words, the everyday person who has a bank account. They want to back their accounts with physical gold? Is that right?
Yeah, that's exactly it, Jeremy. This is massive news, and it came across our desks just this week from the Jerusalem Post, and the headline reads, China sends ripples through the global gold bullion market. And remember, bullion is the physical, and no one even noticed. And last week, an event occurred which was completely missed by the mainstream media, of course, was the People's Bank of China took the next important step to encourage, again, this mindset, encouraging a wider and less wealthy section of the Chinese citizenry to purchase gold and silver bullion. They did this back in 2010. They introduced this push to encourage gold ownership to its citizens back in 2010. And at that time, gold was $1,100 per ounce. China's plans, according to the Post, is planning to enrich its citizens with the gold market as seen in 2010. And they're also sending us a message to everyone that they will protect the gold price from a collapse, given the gold price exposure its citizens will have. So they want to enrich, they want to empower their citizenry by introducing hard asset exposure and ownership, not this mindset here we have in the West of you'll own nothing. You want to be debt rich and own nothing, have interest rates ruin your household. Now, this is the next leg of this multi-decade plan to enrich the Chinese citizenry that has started, and the People's Bank of China is moving to focus to include hundreds of millions of smaller clients who literally have no exposure to gold, Jeremy. So this is massive in terms of the demand, because we know that the People's Bank of China have control of majority of the physical markets to underpin it. And this move will also send ripples through the global physical gold markets, which is already being felt by dealers in London and New York. So further demand coming into the gold markets, And this is massive news, because when you have a mindset from the West versus the East, and we see that money is now being, we're watching the flows of money moving from West to East. This is just a continuation of further de-dollarization and the devaluation of the U.S. dollar, and furthering the influence of the BRIC nations, which include Brazil, Russia, India, China. And this mindset is further shifting away from U.S. dollar based in India. Last year, Jeremy, we noted many times that India they set world records for the amount of importing of silver. And just this week as well, the mindset in India is also educating its citizens on the importance of investing in silver. The headline reads, "Why investing in silver is essential for portfolio for diversification." And the person writes, the role of precious metals such as silver, apart from gold, is gaining a steady ground when it comes to portfolio diversification. That the price of silver has already witnessed a consistent rise, backed by a demand in various industrial applications, as we already know. But they're educating their people. Gold has applications primarily in conductors, electronic industries, but silver finds usage in almost every industry, including automobiles, manufacturing, and medicine. And because, similar to gold, it displays sensitivity to interest rates, inflation, and energy prices. Until April 30th, 2023, they wrote, in the last 5 years, silver has offered returns of 13.1% versus their stock market. And while gold has provided about 12% so far in the year, 8% on gold, silver's about 2% up on the year. So it's doing its job. And when we have all these uncertainties around interest rates and inflation, and uncertainties around the global financial shifts, the hard assets is the mindset that we try to employ here at Guildhall and with the Real Money Show, Jeremy. So this is a very important time.
The number 18778-SILVER, the website, guildhallwealth.com. That's the number. That's the website if you want to get some physical precious metals in your hand, in your portfolio, safely, securely stored. You want to give us a call. We're the experts. We've been doing this since 2002. We've had the registered accounts since 2015.
Yep.
We kind of launched it 2016 officially, where clients can acquire physical precious metals, fully allocated, fully segregated. They can even set up an appointment, go and personally audit their holdings. In other words, if you can't hold it, you don't own it. You can't do that with an ETF, Jerry. You
No.
can't do that with a pool account. You can't do that with a gold-backed fund. You can't do that with an ETF. This is the only way in which you can actually own the physical metal, and it's allocated to you, and there's no counterparty risk. I think it's interesting to look at these gigantic nations encouraging people to get involved in the precious metals market. With regard to China, it is top down. So the citizens aren't necessarily making those decisions. So we kind of keep those things in mind. I'd like to see more information on how this is going to work out. Definitely putting into play the concept that you can, rather than take out your cash out of the bank, you could take the gold. Mm-hmm. And putting that as sort of a backstop to your currency as well lends support to the banking industry. Mm-hmm. Right? You could only imagine how that would stop bank runs, because it's lending support and credibility to the banks if they're saying, look, if you're not happy, take the gold. Mm-hmm. So I like that idea. I would say the biggest takeaway for me from that article is that, number one, it's going to mean increased buying, because they have to create the infrastructure for this and actually have the physical metal.
Right.
But more importantly, it underpins the price. And we're already looking at a price of gold and silver that are close to the cost of production, even though they've kept up with inflation, even though they've performed very well over the last several years. In fact, you could go back 15, 20 years, they've done amazingly well. That said, they're still undervalued. So if you're looking for an opportunity as well, an opportunity to get an insurance policy before the house catches fire, this is the chance. You want to get involved in the market before there's another panic, before there's another crisis. And gold and silver have continued to do their job over the last 20 years. They will continue to do their job through this next crisis that we're going to hit as they continue to raise interest rates into more and more cost on the debt. Let's get into that. Let's kind of revisit the pivot, if you will. The number 18778 silver, the website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver, the website guildhallwealth.com. So let's talk about the Bank of Canada. They raised interest rates a quarter point. I thought it was interesting the last time that they decided to not raise interest rates and our dollar fell against the US dollar, and therefore we were paying more for all the goods we were importing. In other words, by not raising interest rates, they elected to let us import inflation. Now they've decided to raise rates, and the cost of borrowing, the cost of money just went up again. I would like to remind everyone that the reason they say they're raising interest rates is to quell inflation. And this is the inflation that was mostly, let's be honest, it was already in the mail, but then they really put it over the top with the shutting down of the economy and funding the economy by printing all of this currency and going into mass deficits so that, the government could, as they say, quote, so that we could be there for Canadians, unquote, constantly. That's like the one quote that's always being used. So we will continue to be there for Canadians.
So heroic.
It's so condescending, when everyone is dealing with the inflation and dealing with it. They caused it. They printed the currency. They did the deficit spending. Now they want to raise the interest rates on, and basically the idea is to stop the economy and the debt in its tracks, to essentially shut it down again. Right. Now, I'm not saying raising rates is good or bad in this regard. They were way too low for way too long. My criticism would be, and everyone who listens to the show knows this well, you're responding to crisis. Where were you in 2014, 15, 16, 17, where you could have raised rates a quarter point a year? You would have been up 2 points,
That's right.
or whatever. You know what I mean? You'd already be ahead. Instead, you waited for a crisis. So that leads me into the next stage, which is let's revisit the pivot. I think it's time to talk about that because, you look around. We just talked about this the other day. We work in an office building. The parking lot's empty.
Yeah.
You get used to it after a while, but it used to be you couldn't get a parking space.
That's right.
You had to go sometimes, and it's a big parking lot, and there's a covered parking section that's, you could fit even more overflow. You'd have to still park on the street. Today, park anywhere you like. Building's empty. That is, and if you are a landlord and you are paying a mortgage on that with devastated income, and Canada is raising the interest rates on you, I would say that that's a commercial real estate crisis in the making.
Yes.
So the reason I start there, Jerry, is because at some point, I still believe that the raising of interest rates, while I believe it's already causing a crisis, people having to go to food banks, people having to re-amortize mortgages out further and further and further just to stay in their homes, which I believe creates a conflict of interest with banks and these interest rates. It's like you raise interest rates on one side and then you re-amortize people to keep them in their homes so that the market doesn't break. It's all very odd. But the commercial real estate crisis is going to come at some point too, right? So where do you feel we are in terms of the pivot? I know the Fed in the United States is looking towards maybe a pause. Do you think we're still on track for a pause and pivot?
Well, according to CME FedWatch, the tool that they use to determine where the Fed's going next, markets now have priced in a 72% chance of the Fed standing pat or pausing next week. So next week, Wednesday, the Federal Reserve meets again. The central bank is going to be pausing their interest rate hikes. And this is all because of some job figures that came out. So the unemployment data came out very poor, weaker jobs data, which is suggesting that the Fed will hold.
Hold on. Last week they were great.
Yeah, exactly. I mean, this is a tale of the skip or no skip. You know, jobs are up, jobs are down. It's total conflicting data that we're getting from the U.S. and from the BLS in the States. Last week we reported that the U.S. economy added 339 jobs in May, which topped estimates by a huge margin. So that suggested that there would be a rate hike. And then fast forward to this week, and we're back to a skip. So they're going to possibly pause. But we'll have to see, because we are also traders and we are bracing for the U.S. inflation report that's coming out Tuesday of next week, so the day before. So we don't know exactly where they're going, but we do know if we...
Well, we can guess. I mean, oil prices aren't down. Gas prices aren't down. So I imagine it's going to be up.
Everything is.
That was the only thing that was driving prices down. Was correct? I mean, I don't know for sure, but I would assume that the one thing that was driving inflation down the last time was, besides fudging these labor
figures,
statistics, was the fact that they were releasing strategic oil from the reserves. So that you release that oil, you're trying to like lower the energy prices. So you could say, okay, so less energy prices, inflation was down.
Mm-hmm. And that's a temporary solution for the Federal Reserve and for the for politics in the U.S. to keep face, but it's temporary. You eventually run out of strategic oil, or you go below a threshold where it becomes a national security issue. So that's where we're at. They've slowed that down, and now we're seeing further just uncertainties from housing to continuing poor retail sales, all of these indicators that are just pointing towards a looming recession. This week, the Bank of Canada hiked rates over alarm at household spending and stubborn inflation. And on the back of that, you had Manulife's chief of economics come out and says that Canada is heading towards a recession. And it's probably coming into the second and third quarter.
And let's remind all of our listeners how our politicians said that they were not going to raise rates, that they were going to be low for a very, very long time. Let's all just take a moment to remember that. They said interest rates would be low and would not go up for a very, very, very long time. Mm-hmm. That was only less than a year ago that they were saying those things.
And do people really believe them anymore? It's I think the confidence is just gone with regards to the politicians, the false promises. The Canadians have had enough, and I think that's why they're moving and they're voting with their pocketbooks. They're shifting out of the traditional, conventional means, and they're looking into alternatives.
I want to agree with you,
mm-hmm.
and I don't want to just play opposition with you. Yes, I see the wins. I see the Overton window being moved in mainstream media. You should see the stuff they're admitting to now in mainstream media. Instagram, for instance, these type of things. The Biden and taking bribes, these type of things. Like, there's a lot coming out that they're kind of backing off on. But you know what? I go around the city. We're having the mayor election, and I go around the city and I look at the platforms, and some of the platforms are just spend. And I think, where are you getting that money? Mm-hmm. You can deficit spend, so you can just put it on the backs of the next generation. Where are you getting the money? What I would love to see is cuts. Here's where we can do some cutting, right? How are we going to get to productivity? What kind of things can we do to incentivize businesses? Everything right now is being done to do the opposite. So at the same time, when I see these signs everywhere and of these candidates who just want to spend more money, I think, I don't know if we're doing good enough a job, Jerry. I see signs, A boards. I see condo sign A boards being flipped over, and a call for more affordable housing. Well, who's going to pay for that? Who's going to pay for that? You want to give everyone universal basic income? Sure. Let's give everyone $1,000 a week. And when they realize inflation just kicked up another notch or two, that $1,000 doesn't buy you what it used to, and you need now $1,500, well, where does that money come from? Everybody still wants things for free. Everyone is there. Not everyone. What I'm saying is there's still so many people, Jerry, who are living in a dream world. And I'm wondering at what point does it affect them? My contention is that they think inflation is just a natural phenomenon. It's just something that comes out of the blue. You know? So I don't know if we're doing good enough a job. I see people buying metals. I see people starting to understand. But how do we get those other people to understand that owning precious metals is going to give you a 400 and something % return over the last 20 years? Imagine what it's going to look like the next 20 years. We just had, sort of going on a little rant here. You were in a meeting with us just now, just before we were with one of our dealers and partners. And we were talking about how do you clear up the fact that on any given day, if there's a little bit of crazy movement in the market, you have a blast of people come into the precious metals market, and all of a sudden there's not enough product. And I said, yes, but price will fix that. And our partner said, no, it won't, because a $30, $40 price tag isn't really going to stop. And I realized, you're right, because as the price goes higher, more people are going to want to get involved, because more people will buy silver at $30 than they bought at $20, and more will buy at $40 than they bought at $30, and more will buy at $50 than they bought at $40. Along with more and more crises coming up. That's why we're talking about the Bank of Canada, so we have to get back on that track. But you are now going to need massively higher prices to start bringing down premiums in the market, start making it available again for people, because it could get sucked out of the market so fast. And when we talk about China, we talk about inflation, we talk about people realizing maybe I should do something about it. Maybe I shouldn't trust the government, since they were so quick to say, well, we're going to keep rates where they are. You're on your own. Be your own central bank. Be your own bank. Have sovereignty. The best way to do that is actual physical metal.
Absolutely. And there is no better way. This is your wealth insurance, number one. This is the reason. The reason why central banks and countries are heading and flowing into gold and silver like never before. It's for the independence from all of the conventional arrangements, the currencies, the financial institutions, the banking systems. You know, Janet Yellen just came out this week and said that she actually sees that there's going to be more banking consolidations going forward. So she's signaling further banking risk. Consolidations in the banking industry is bad news. When you have the big ones taking over the small ones, this is a rippling effect that's happening around the world. These rate hikes are doing one thing, and that's rattling the confidence out of the system. The depositors are moving out, and further consolidations of the banking industry is what gold avoids. And you safeguard, you insulate your wealth with the ownership of physical assets that have the potential for tremendous topside potential in this market.
So we'll stay on this topic. Let's talk a little bit about Janet Yellen as well in the next segment. The number 18778-SILVER, the website, guildhallwealth.com. Your way, your path to physical precious metal ownership, to become your own bank, have your own sovereignty for yourself, protect your family, and take advantage of the low prices and the fact that gold and silver are undervalued. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER, the website, guildhallwealth.com. Jerry, I think as we think about these interest rate hikes, just to kind of conclude on that point, I think that these central bankers are not letting the market fully react to what they're doing. It takes a long time for these rates to work their way through the system to find out what the consequences of them are. I think as we think about it, that they are doing it sort of almost symbolically in a way, because it's not methodical to raise them this much this fast. I think they're doing it as almost a symbol of that they're in control, but they don't know what the outcome's really going to be. Let's be honest. They didn't know what the outcome was going to be when they printed trillions of dollars in 2008, and now the federal balance sheet is up in the 9 trillion range. Speaking of the Federal Reserve balance sheet, the debt ceiling got raised. Janet Yellen got to refill her coffers over at the Treasury, which were running on vapors. Okay, they were They were on code red over there in terms of what they had to roll over. And don't forget, since the Fed is no longer making money because of the raise in rates, they're not sending any excess funds over to the Treasury.
That's right.
Which is what they used to do. So they got their debt ceiling hike, and bang, they're putting in $1 trillion, 2 purchases of was it 250 billion or 500 billion each? I can't remember if it was $500 million or $1 trillion. It doesn't matter. It's coming.
Right.
If they haven't gotten to $1 trillion, it's coming. They're putting that debt out there, the Treasury, and who on this green earth is going to buy it? That debt. Who? Nobody. The Fed. The Fed is going to buy it. Doesn't matter by hook or by crook. All roads lead to the Fed. So they're going to put another $1 trillion on their balance sheet, right? The debt had to be paid before by someone, and the Federal Reserve's just going to print it. So they're raising rates on one side and printing the currency on the other, or buying the Treasury debt. Come on, this is just, let's keep the balls up in the air as long as we can. It's going to fall. So I don't know if it matters whether or not they continue to raise rates, or they get into a crisis mode and they drop them again. It's done. It's done. So when you see these countries like China and India and all the BRICS nations buying physical gold, what do they know? Are they buying it for their health? Muammar Gaddafi tried it, and back then you tried something like that.
War.
We'll see what happens to you, bud. Right? You want to go off on your own and try to create a North African currency backed by gold?
A union?
Good. Best of luck to you, my friend. Right? Today, how many BRICS nations are we up to? And they're going to get together in the next couple months, this summer.
Once again.
And they're going to unveil what their real plans are. They're going to talk about backing their currency with one world currency with gold, not your central bank digital currency where you will own nothing type, the kind that says, hey, we're all in this together. Let's build.
That's right.
Let's build. Let's do it. Let's back it with gold. And then you see what China and India are doing. Everyone's buying gold. How are you going to defend against the raising of rates? You better own gold. How are you going to defend against inflation? You didn't cause it.
That's right.
But you better protect yourself against it.
That's right.
And if you can, own some gold.
Gold ownership.
That's it. That's it. If you can do it, do it. If you have a retirement fund, you used to work for a company, they gave you a fund, right? A pension, you paid into it. Well, maybe you don't work there anymore. Maybe it's been sitting there being managed by someone at your old company.
Which is the case. Yep.
Move it over to Questrade. Give us a call. Move it over to Questrade. Put physical gold into that if it's being ignored. What's it doing for you? I'm looking through some of when we start to look at gold and silver versus mining. Are you, I'm seeing mistakes being made in that respect. George Gammon. You know George Gammon? Yep. Everyone should check out his whiteboard stuff.
Great videos.
He's great. He's a good guy. By the way, you know what? He was just in an interview, Jerry, talking about Turkey. You want to know how they're handling hyperinflation in Turkey? He went to Turkey recently and he was asking everyone he could, right?
Okay.
Give me, tell me what's happening. How are you doing this? And apparently what they're doing is they take their Turkish lira at the end of the week when they get paid in Turkish liras, they pay all their bills, and everything after that, they instantly put it into gold and US dollars. Well, if you're in the US already being hammered by inflation, then you already have the US dollars.
Right.
You have to put it into gold. Same thing in Canada. You don't have the opportunity to say, well, you know, I'm a basket case country. I'll just go into US dollars. And no, you earn Canadian dollars. You need Canadian dollars and gold because this is coming. It's coming. They've already shown that the people running the finances are completely inept, and when they won't tell you what's in the finances, it's
right.
even worse.
The people have just lost total confidence. And speaking of Turkey, I think they just announced the new head of the central bank in Turkey, so which is causing more panic into gold and diversing away from the Turkish lira. They hired the former head of First Republic, one of the banks.
You are kidding me.
One of the banks that went down recently in this whole crypto shuffle. And the crypto shuffle is definitely on. There's news and with a fiat withdrawal pause, people want to take U.S. deposits out. So Binance is suspending deposits and withdrawal pauses. There's a lot of claims from the SEC is really clamping down on Binance. This was one way of diversifying away from a U.S. dollar and diversifying away from fiat. We know the issue. The issue is a currency problem. Inflation is a currency problem. And when you have central planners that are just, pedal to the metal, let's burn this currency down for the purpose of gaining wealth or for politics and keeping control, the panic is on. And the nations and people around the world have seen and they've made their decision away from the US dollar. Crypto, unfortunately, when you cannot get out and when you can't get out and you're back into a US dollar, is a failed experiment. With gold and silver, you can convert into anything. Gold is convertible, silver is convertible into any currency that you need to be in, whether it be one of these fiat currencies or the new currency coming in. And we're keeping an eye on the BRIC nations developments because we have to be cognizant of the influence that they have. Brazil, Russia, India, China, they have the influence in the physical bullion markets. They have the influence in all the resources that the West needs. So as we and our central planners are gambling away with paper, we are looking towards the physical markets. All roads lead to physical. All the flows are leading to the physical markets. We brought up the Gallup poll last week where we were able to realize where the best long-term investments are. And the mindsets have shifted down from real estate and up into gold. The mindset is now shifting slowly here in North America, but it's shifting, Jeremy.
And listen, in the next segment, let's talk about the purchasing power of physical gold, because even should real estate continue on its path higher, the purchasing power of gold is going to increase. And so what is that going to mean for the potential of buying real estate in terms of gold? It's not going to be so much about the price of gold, but what it buys you. In the meantime, sure, maybe the debts don't matter until they matter. At the end of the day here, this is about insurance for your portfolio. You cannot wait until the house is burning down to go out and get the fire insurance. The fact is, it's starting to rain. Build your ark, be protected, get that insurance into your portfolio, and that is be your own central bank. As they say, own physical gold, physical silver. Remember, if you can't hold it, you don't own it. I think I've thrown all of the sayings out there, but it's very important. You have to have the physical. You have to have that ownership. The number 1-877-8-SILVER, the website, guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show, the number 1-877-8-SILVER, and the website, guildhallwealth.com. It's not just physical gold and physical silver that can protect you against inflation and protect you from the devaluation of currencies and potentially even deflation in the market. You want to have assets that you own and control that have no counterparty risk. And one of the assets that we're starting to see make big waves again is the natural fancy colored diamond market. even if you look at the Fancy Color Research Foundation, they monitor an index on colored diamonds, and so they look at all the colored diamonds from all the dealers, and they can see that there's a clear uptick in the colored diamond market over the last year and a bit. And I think that we're at the cusp of a new bull market in natural fancy colored diamonds, and you can see this at auction. So guys, when you're out there and you catch some news pieces, you're going to start to see major colored diamonds being sold at auction and records being broken, massive records being broken. And you have to wonder, why would someone buy something for $50 million that could be held in a single palm, be put on a finger, right? Mm-hmm. In a ring? That's equivalent of buying 10 houses that people are buying into a single asset. This is because they're beautiful, they're rare, they have no counterparty risk, there's very little paperwork, they can go internationally, there's no cost of doing business. If you were to buy a house without a mortgage or a diamond over a 20-year period, imagine all of the excess money that goes into property ownership, taxes, maintenance, dealing with disputes on renters, all sorts of things are going to go into that over the years. Is it going to go up as much as natural fancy colored diamonds have? They have never seen down years. Because at the end of the day, they don't have leverage. You don't have to sell them, right? But we are seeing a nice tick up in that market. Something to consider at Guildhall. We go out and purchase that product, that asset. We've been in the business a long time. We know what to look for. We're looking for strong color, strong clarity. We want assets of a certain size. And once you have all of these things in play, you have something that is going to continue to build in value for decades, something to be passed on. None of this, well, grandma had a ring and, well, I'm sorry, it was not a great quality, so it's got it's got value in terms of nostalgia or whatnot, but it doesn't have the type of monetary value that you want when you're passing something down through decades. So that's just a quick thing about natural fancy colored diamonds to consider. Mm-hmm. So let's get back to real estate and gold. See, at the end of the day, I think we have to start thinking a little bit maybe about inflation, deflation, that if there's deflation, if the value of the money starts, if the money is being pulled out of the system and prices start coming down, it's what comes down the least that wins. So if there's leverage in a market like real estate, you could have that come down very quickly. But even if it keeps going up, Jerry, gold is outpacing real estate at this point. It is moving up over 8% a year. And I believe over the next couple of years, you're going to see a couple of years where gold moves up 20 or 30% in a single year like we've seen in the past. And those type of scenarios, you end up with a stronger purchasing power, meaning you need less gold to buy the same property that you did 5 years ago. Mm-hmm.
Yeah, we're definitely noticing that trend in gold and in various hard assets from natural fancy colored diamonds. Flows are moving out of share markets at a rapid pace, and they're funneling into the hard asset space because of the issue of our currency. When you need more currency, when you need more dollars to purchase the home 5 years from now, this is too much currency flowing around for too few goods. And we need to acquire the goods now before the loss of purchasing power continues with the massive amounts of cash that you may have if you just sold or liquidated. Countless of investors have liquidated. Many people are trying to liquidate now. The housing market is flush with supply now. People trying to get out of the housing market. But this is it. This is just what we're seeing. All of these indicators of a looming recession, from a slowing housing market to poor retail sales, further inflation, and we have this persistent inversion of the yield curve. All of these things, and diamonds are performing well. Gold is performing well. Silver is now catching up. But the smart money, if we look at an indicator of the smart money, we talk about institutional money, which is the smart money we're talking about. We have a chart here called the cumulative capital floors, where we see money flowing just out hundreds of $billions of institutional money. I mean, right now the stock markets are up. The S&P's up about 10, 11%. But the fact that the institutions are dumping hundreds of $billions right now of equity market holdings, the most since May of 2022, this is a huge warning sign for everyday investors. As the most connected market participants are reducing their exposure to the share markets, they're getting into assets that like gold, silver, and even natural fancy colored diamonds. Assets like diamonds, assets like gold and silver are the potential refuge for these scenarios of a market rout, a future recession that is coming. And we're seeing money, the smart money, flowing into natural fancy colored diamonds. Last week you mentioned huge auction coming up, which was the Sotheby's Magnificent Jewels auction that went down yesterday, and it's going to go down in history. It just made history. The Thursday's auction set multiple new benchmarks for the market and the auction house itself. Money is flowing into natural fancy colored diamonds, and a vivid pink diamond and a giant ruby both sold for $35 million at Sotheby's. So most importantly, the most important dazzling gemstones sold that we've seen ever. So this is a massive news piece for money flowing, smart money flowing out of share markets, out of paper-based markets, and into physical assets such as these, Jeremy.
Get out of harm's way. Get into an asset that has zero counterparty risk. The number 18778-SILVER, the website guildhallwealth.com. Remember, there's also people struggling. We're seeing the lineups at food banks. See if you can do your part. See if you can help out in that way. But of course, one of the best ways is to protect yourself, become successful yourself, and then you can help even more people. Again, the number 18778-SILVER, the website guildhallwealth.com. Jerry, thank you so much. Great chat. Thank you to all our listeners for joining us today, and we look forward to speaking with you next week here on The Real Money Show on 640 Toronto.